Isn't it interesting how one simple investment principle can apply across every single asset class? Investor psychology is crucial to winning and making money, not just in crypto, but in life in general. The simple quotation of "be fearful when others are greedy and greedy when others are fearful," we've all heard it many times. Nothing new here. But when you literally see it play out right in front of your eyes over the last 12 months, when we were fearful, the price was low. When we were greedy, the price was high. We seem to be transitioning out from a fearful sentiment currently. So what's to say this time it won't be any different? What's up guys, I hope you're all doing well. Another market update video here. We're going to take a look at the technical chart for Bitcoin, see how it's fared in recent weeks and what could be on the horizon. We'll look at some fundamental news headlines and do some wider market macro analysis. Then finally, we'll close off the video with Ethereum, altcoins and my thoughts mixed in with some therapy for you guys. As always, you all know the drill. Whilst I am a financial advisor in real life, none of this is financial advice. I have been saying since we first began dropping in February and March that I didn't think this cycle was over. I was one of the few going against the herd, whilst the majority were panic selling, giving up, and telling their communities a mixture of contradicting ideas. I saw it all over YouTube and X, being bearish when the markets were down, bullish on small pumps, and then bearish again. But I have stayed resolute. Go over my previous videos to corroborate. Take a look at my Discord. I didn't think it was the end, and I believe I will be proven right very soon. This wasn't hopium or being a permabull or delusional. The technical data that I focused on hadn't been invalidated. The fundamentals remained strong, and macroeconomically, we still have plenty of room to grow. I gave a prediction a couple videos ago that in the second half of April going into May, we should, hopefully, start to see more green if our boy Donald can keep his mouth shut and not screw the markets. So far, it looks as though he's behaving and it's still on the cards, but let's take a look at Bitcoin's performance in recent weeks. So since we wicked down to 74k a few weeks back, Bitcoin has held up remarkably strong. I have been extremely impressed with the strength. With everything going on in the world, there is more than enough reason to send Bitcoin down to below 70k, into the 60s or even lower, and no one would be too surprised. Instead, we've had a few wicks down, removed some liquidity, and bounced right back up to the mid-80s range. A nice foundation is seemingly being created here. The 50-week moving average is still being respected very nicely. We had a close scare where if we closed the week below this, I would have been a bit nervous, but so far so good. This indicator has been great so far this cycle, we can see at numerous points, and as long as we continue to respect it, there's plenty of potential left for us to make money. We have also held above the dreaded 70k, 65k levels. These are figures I keep seeing mentioned numerous times in the news, so much so that I don't think we'll drop that low purely because everyone is expecting it. The news is never as bad as they say, and it's never as good as they say. There were calls for 150k when we were trading around 100,000. We didn't even get close. I think this will be similar. So we need to breach this $88,000 level. This has proved to be strong resistance in recent weeks. We test it but cannot close and hold above. If we can do that, I can see us pushing on towards the low 90s and show a clear reversal in the charts. Sentiment should begin to pick up quite quickly at this point. But should we drop below 70k and start to consolidate here? As I keep saying, I will have to reevaluate my thesis and admit that the cycle is looking like it might be over. See, I'm not a delusional idiot, just someone with a thesis which has not been invalidated yet. Quick break to ask, why are you not part of the best free community in crypto? Join over 1,000 people determined to make money and help each other out. Sign up to the email newsletter too, it's all free, you've got no excuse, link down below. So one piece of news which I've seen circulating and doing the rounds on social media is this death cross idea. This is essentially where the 50-day moving average crosses below the 200-day moving average. This is being viewed as bearish and is apparently signifying the end of this cycle and Bitcoin to plunge below 70k, traders to be doomed, blah 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 blah. Whilst I understand the logic and I have seen it used as a technical indicator in the past, I'd like to quickly illustrate that so far this cycle, it has been the complete opposite of a death cross. It's been a life cross. Shit joke, yeah I know, but look, we move. This death cross has already occurred a few times over the last couple years, and each time these lines have kissed, we have seemingly rallied straight after. You can see it here. Look, kiss, then boom, we pump. Here, kiss, pump, kiss, pump. Right now, we are currently kissing. Does this imply that we're about to pump? With this data and some other metrics that we'll look at shortly, that is a highly probable outcome, and it's reasonable to say so. I don't know if I've got this wrong myself. I just, took a look at the data, and every time I see this alleged death cross, so far in the last 12 to 24 months, it looks as though we've done, relatively well. Michael Saylor has continued to do what he does best, and that is buy Bitcoin. Although he doesn't like the cheap prices, he likes to buy local tops. MicroStrategy now owns 531,644 Bitcoin, a truly ridiculous number and around 2.5% of the total Bitcoin supply. Whether that is against Satoshi's vision of a decentralized currency is open for debate, but his unwavering conviction has to be admired and can be viewed as a net positive for this space, especially in the uncertain times like now. There will be many investors who see Michael continuing to buy and will follow suit. And that's exactly what is being seen in this Bitcoin whale chart. Since March, those with a balance between 1 to 10k Bitcoin have been buying up Bitcoin pretty aggressively. Whether you want to call this smart money or not is up to you, but when retail investors are running around scared, the rich are getting richer, and it looks like that is taking place yet again. I don't believe these whales will be investing into an asset that they think will decrease over the coming months. Moving on to macroeconomics, we have seen a much needed calm in the tariff wars, which I did say would happen. The craziness was not going to last, and you guys know my theory. Trump wanted to create fear and uncertainty to crash the markets in order to put pressure on the Fed to reduce interest rates, which in turn reduces the value of the dollar, which then lowers the enormous trade deficit America currently has, and also encourages Americans to do business with Americans, increasing domestic growth. I also said many of the countries would look to do a deal with the US and try to reduce the impact of the tariffs because, let's face it, 99% of countries need America more than America needs them. My theory was it would turn into a trade war primarily between the US and China, and that looks as though it might be playing out, although there are rumors of a deal being sorted between these two nations too, which, if it happens, the markets will react quite nicely. However, we've got to factor in the key question: does Trump have another spanner in the works? I don't know, no one knows. We may not be out of the woods just yet. Looking at trueflation, we are still comfortably below the Fed's target of 2%, and the previous month's CPI data of 2.4%, showing that we are getting month by month improvement. And as a result of this, the Fed are still, of course, pricing in multiple interest rate cuts this year. I hope we get the first one next month in May, but I'm not 100% sure this is what they plan to do. They did mention that they will get involved in the markets if they need to, so it's just a matter of when, not if. 3 to 5 interest rate cuts this year could be crazy though. Something else I wanted to discuss was how aggressive the Fed's actions will be. Did we see enough blood in the markets to warrant a sudden halt of QT and potential launch or stealth launch of QE? I'm not so sure. It seemed we were going that way, then the 90-day pause created a strong bounce. So whether the Fed think the worst is over or not, who knows? Trump did say if he wants Powell out of there, he'll be gone so fast, which, are fighting words. So hopefully Powell feels slightly pressured to comply with the president. QE would really ignite the markets, but I don't even think it's necessary. Let's just cut the rates and stop the contractionary policy to see what happens. Looking at the dollar, it has fallen into and below my risk on region, which I've had predicted since the start of the year, or even the end of last year. It's actually fallen a lot sooner than I expected, and quite aggressively as well. The only issue is it's in the risk on region in times of extreme uncertainty. So naturally, the risk hasn't been switched on yet. However, if we can hold around these levels or even drop more, once stability comes back to sentiment and the rates begin to cut, then damn, I think we'll see a heavy rotation into the risk assets like stocks and Bitcoin, and should be geared up to run to 100k and beyond. Speaking of stocks, I still love pointing out this S&P 500 chart against Bitcoin. One line is the largest 500 companies in the US, tried and tested over decades, and the other is a scam, magic internet money with no future. Take a look at which held up better. Also, global liquidity continues to impress and has reached new highs for this cycle. More sharp increases since the bottom at the start of the year, and we're seemingly in a huge uptrend. This is probably the most simple concept to understand. The liquidity is rising around the world, which means more money is available to be invested, which means risk assets will rise. Bitcoin tends to follow this with a lag, be it 75 days, 85, 95, 100, I don't care, but the thesis remains valid. So it's only a matter of time before we see it reflected in the price. When you keep your analysis as simple as possible and use some common sense, it helps to gauge where we will be headed in the mid to long term future. Moving on to Ethereum, my favorite shitcoin. I don't have much to say about this one, to be honest. It's fallen into the first range I marked out a few weeks back and is ranging almost perfectly in here actually. If we do drop again, which is definitely possible, the next target is within the 1000 to 1250 range. I know guys like Benjamin Cohen are calling for ETH to drop to this level. Yeah, it's possible. Not much difference to me because ETH's been crap regardless. We just know it'll drag down all our other alts with it. Reasons as for the poor performance, aside from the obvious market conditions, to me is still manipulation. It's been going on for a while now, but I don't think the big players will all file for ETH ETFs, then allow the asset to bleed and die. I think at the right time, they'll let it rocket, just like they did with Bitcoin. Whether that's in May or later this year in Q4, we have to wait and see. I have been accumulating Ethereum at these levels, so I've put my money where my mouth is. Just got to be patient and ride out the waves. So back to the therapy couch, to the few of you still watching and still engrossed in this space. If you are still around, congrats. You don't know it yet, but you have been conditioned. You will be thinking more objectively in the future. You've seen the highs and you stayed around during the lows. You didn't run when the going got tough. You stayed and you endured. You educated yourself. You learned about mindsets, learned to navigate and control yourself when things didn't go your way. Yes, these are applicable to crypto, but everything I just mentioned also speaks volumes about yourself as a person. These life skills and the battle-hardened persona you've been curating will pay dividends later in life. I can guarantee it. If you weren't aware, the coin Mantra suffered a Luna-esque capitulation a few days ago. It dropped 90% in a week, and this was no small cap. This was one of the highest ranked crypto coins with a market cap between $6 to $8 billion. I feel really bad for their holders. You put your faith in a project, one which could have been classed as lower risk or given blue chip status, only to have serious amounts of your cash wiped out. I never spoke about Mantra on this channel or in my Discord. It wasn't mentioned by my community and I never really had an opinion on the project, but it goes to show you what is possible in this space. Remember, we are holding the riskiest assets in the world. Expect outcomes like this. If it were easy, everyone would be rich. It also goes to show that if projects you are holding or watching are performing well in these dire times, either from a price perspective or fundamentally, or both, there is a serious chance of a strong recovery in the eventual reversal. Not guaranteed, of course, anything can happen, but it's a game of probabilities at the end of the day, and that's exactly what we're playing. I do believe the coins I've mentioned on this channel will survive and will bounce back, so let's be patient and assess. You only lose when you give up. If you were invested in Mantra or other projects which exposed you to serious losses, I'm very sorry that that happened to you. It can be extremely painful and demotivating. Trust me, I know, I've been there. But you can dust yourself off and go again. The next leg will create plenty of wealth opportunities and you're in the perfect place. Please subscribe and join the Discord to increase your chances, and aside from that, thanks for watching, take care.